LiteFinance, the world of financial freedom.
Hello, today is May the 9th, so let's start with the market forecast. Well, when it comes to macro events, this calendar contains only a handful more important data publications, with the whole focus this week on the US inflation reading on Wednesday. In addition, we will talk about the drop in the global PMI below 50 points, but only if we add China to it. So let's start with the macro calendar, which, as I mentioned this week, does not have much to offer for us. So the first more important data will be released on Tuesday, and we are talking about the ZEW Institute Economic Mood Index, which is again negative due to the war in Ukraine, or rather its effects on the German economy, which is strongly based on the cheap Russian raw materials, which may end soon. Firstly, because, as we all know, the departure from Russian gas has already been announced by the end of this year, and in addition, new sanctions on Russian oil might be announced soon. So a negative forecast probably makes sense here. Then on Wednesday, they announced the data on inflation from the US, which is expected to drop slightly in annual terms. Looking at the reading from last year, it was the moment when inflation really shot off for good. So perhaps the forecast about the first signs of slightly weaker readings is here in place. That it would be a positive signal to the markets and to the Fed itself, because they will be able to boast that the recent rate hike has started working, not taking into account, of course, that inflation came from a limited supply of goods and energy prices, not from the mythical printing of money. Therefore, raising interest rates will not contribute to lowering inflation, but even increase the cost of living and lessen the consumer spending, which is currently one of the factors driving economic growth globally. So moving on this day, we will also receive data on crude oil inventories. On Thursday, however, we will receive GDP data from the UK, initial jobless claims, and inflation from US on producers' side. Friday is calm this time. Only will receive the publication of the University of Michigan Consumer Sentiment Index. Moving on to the main driver of the slowdown in production and demand was the severe crisis in mainland China, where production and new orders fell sharply for second consecutive month, and the pace of decline accelerated to the fastest since the initial pandemic in February 2020. However, while the initial post-pandemic slowdown in China continued just 1 month, China has now reported a decline in production in 3 of the last 4 months, with the latest cyclical decline representing the worst production performance since the data collection began in 2004. Moving on, with the exception of mainland China, global production growth actually slightly accelerated in April, though remains well below the average pace recorded last year, which is rather natural when economies were opening. The United States contributed to the overall improvement with production rising at the strongest pace since last July, and to a lesser extent the United Kingdom, which also saw an improvement in growth. Meanwhile, Japan saw a sustained, albeit a slow recovery after the brief Omicron-related slowdown in February, while the rest of Asia as a whole also saw an improvement from the slowdown in March. However, in addition to slowdown in China, overall global expansion was weighed down by the slowdown in euro area production, which in turn was fueled by renewed decline in German production, reflecting the impact of the war in Ukraine on those economies closest to the conflict, both geographically and economically. It should be noted that the PMI data for Russia are not updated since April, but the March data showed that Russia was experiencing the most sharp decline of all of PMI economies and one of the sharpest falls in history, mainly reflecting the impact of sanctions following the invasion of Ukraine. Well, let's move on to charts now, starting from Euro-USD, which, as we assumed a week ago, stopped at this support. Despite a slight northward orientation, it is hard to talk about any stronger decline of these levels, and I would not expect a breakthrough and exit to the bottom by no means until Wednesday. And if CPI readings will not differ significantly from the forecast, or rather it looks likely in the short term, and most likely we will stay above 1.0514. So moving on, Euro AUD tested the bottom support again, but it shouldn't trigger our stop losses. As you can see, the direction is in line with our plan from last week so far. So next, Brent crude oil. It plays a poker with us. The last scenario did not work out. After a successful long trade from the previous weeks, the price is strengthening right now. But looking at the FIBO expansion, we had one-to-one pattern, and I will look for a shorts here again after breaking to the downside $110 support level. So, okay, that's it for today. Thanks for watching, and till next time.